Hi everyone. In this video we will be going over what self-employment is and how it impacts your tax return. Most of us are already earning self-employment income without even realizing it, like through a hobby or a side hustle. Maybe you are getting some money by tutoring someone's kid, or babysitting, or even walking a few dogs, or could be through selling your grandma's baked cookies, or doing late-night Uber shifts. If someone is paying you for a service, or for something you sell, then in the eyes of the tax authorities, that makes you self-employed, which is basically running your own small business, and it will need to be reported on your tax return. We will be covering the reporting in Canada. However, once you understand the basic concept, it's pretty much the same worldwide. If the money is coming in, then the tax reporting is required. The details like which form to use, what you can deduct, and when you need to file the tax return depends on where you live, but the concept is universal. So let's dig right into it. If you are earning self-employment income in Canada, then you will need to fill out a separate form, called T2125 at the time of filing your personal tax return. Don't worry, the online tax softwares already have this form, so all you need to do is fill it out along with your taxes. This is what the form looks like. I've also dropped a link below for your reference. It starts with some basic information, like your name, SIN number, business name, business number. If you don't have a business number, don't worry, you can keep it blank. Then comes your business address, which can be the same as your home address, the city, province, postal code, fiscal period, which is basically the calendar year from January to December. Then it asks if this is your last year of business. Yes? No? Fill it out accordingly. Then comes the main product, or service, which basically explains what type of business you are running, like tutoring, consulting, designing logos, walking dogs, or selling candles. Next is your industry code. This is a code given by CRA for each type of business. It can be found on CRA's website. All you need to do is just enter the type of your business on this site, and it gives you the code. I've dropped the CRA website link below. Next box states that, if your income is on commissions, then select the accounting method here, whether it's cash or accrual. Then if you have a TIN number or partnership, then enter the details here, and then the details of the person preparing this form would go here. Next section is, if you are earning income from online business, then the details would go here, like how many websites and website addresses you are earning income from, etc. Moving on to part 3 of this form, where we will enter the numbers, like how much money you made from the business this year. It could be through e-transfers, cash, or even checks. It is called gross sales in this form, and this is where you would enter the total amount. If you're registered for GST, make sure to include the total amount you collected in this section. I'll be making a separate video for GST, but for simplicity, it's the sales tax you would collect from clients and pay it over to the tax authorities. If you make over $30,000 a year, it's time to register for GST. Then part 3B of this form asks to report professional income here. So if you are an independent consultant, or dentist, or a chiropractor, basically income related to any profession would be reported here. Next comes the part to write down all the expenses. Let's say you purchased materials, hired someone to help out, or hired a subcontractor. Those expenses can go here to reduce your income. More expense options are given in this section, like advertising. Say you had to print banners, promote your business on some websites, pay for marketing, etc. That's all covered under advertising here. Then, next expense is meals. Let's say you took a client out for a lunch, or brought some snacks for your staff. These expenses are covered under meals here. But remember, only half of the meals expenses can be entered here. That's just the CRA's expense limit for meals. So if you spend $100, you can only enter $50 here. Next expense we have is bad debts. Let's say your customer promised to pay you next week, but never did, and then a month passed, and still nothing, and now you are wondering that you will never get paid after all the attempts to collect. That's called bad debt. And it will go here. Next expense is insurance for your business. And as you can see, there are various other expense categories listed here to choose from. One of them is travel and vehicle expenses. But make sure to keep a mileage log, as only the business portion of your driving is eligible. So if you're driving to meet a client, or to buy business supplies, that's a business expense. But if you are driving to buy groceries, then that's personal. If you have any other expenses that are not listed in this section, then they can be entered below here under other expenses. There is one more expense that you will see here, which is CCA. That's basically like a breakdown of expenses on big-ticket items. Let's say you purchased an expensive machinery for business, or a truck, even a laptop, furniture, or a printer. These are all called capital assets, as they are one-time, big investment purchases. What makes it different is you cannot claim the full amount as expense at once on your tax return. You can only claim the expense in installments, or breakdown, called CCA. Let's go over an example. Say, you bought a truck for $50,000. Now, ideally you would say, it's for business, and would want to write it down as an expense here. But, CRA has its own calculation for how much you can write down as expense out of the $50,000. Let's say, as per CRA's calculation, you can only put down $10,000 this year. And when you file next year's tax return, you can put down another $10,000, and so on each year, until total $50,000 that you paid for the truck is claimed. This breakdown is called CCA. And CRA has a different percentage calculation for each type of investment. The percentage and details can be found on CRA's website. I've dropped the link below for CRA website, and link to my video explaining them in detail. Let's move to the next part of this form. If you are a partner, then you will receive a tax slip, called T5013 from your partnership. All you need to do is enter the amounts here from that slip, and any other amounts would be entered here. This next section is interesting, because it gives you additional expenses to claim. As a self-employed, most of us don't have an actual office to go to, and work from home. Like me, I'm making this video from my home. So that means, my office is a part of my home. I work in a small room, where I store my office supplies, laptop, recording gadgets, printer, and so on that I use for work. And I can claim this little corner of my home as office use. This allows me to claim my heat expenses, electricity, insurance, maintenance, mortgage interest, property tax, and even rent expense here. But only for the part of the space used for office. For example, my home is of 700 square feet, of which the office area takes about 100 square feet, and the rest 600 square feet, is personal. Once I enter the personal use part here, that is 600 square feet, then it calculates the amount that I can claim on my tax return for office use. Next section covers details of other partners. If you are part of a partnership, then enter the details here in Part 8 and Part 9. Then, we come to this little table, where the CCA calculation is done. Remember? The CCA we discussed above here? This is the detailed calculation form. Check out the separate video in below link to go over the calculation in detail. Rest of the form covers reporting of any sale, or purchase, of equipment, or building during the year. Once you've entered all your information into this form, the magic math happens in the software. Your net business income is calculated. That's just your total income, minus your business expenses. This net income then gets reported on your personal tax return, on line 13500, and this is the number CRA uses to figure out how much tax you owe. And if you owe over $3,000, the CRA may ask to make quarterly installment payments for next year. Now here's the twist. Because you are self-employed, there's no employer deducting taxes for you, or Canada Pension Plan contributions for you, which means you have to cover both the employee and employer share of Canada Pension Plan. This contribution is mandatory in Canada, so there is no way out. Once you file your return, Keep all your records, like receipts, mileage logs, invoices, GST collected or paid, for at least 6 years. The CRA has a set time frame, where they can ask for proof anytime for the last 6 years. Lastly, file on time to avoid any penalties. The general deadline for personal tax return filing is the 30th of April. But, for self-employment, we get an extension and can file the tax return by June 15th. Here are some helpful tips. If your business is growing, and you're finding it hard to keep track of everything, like income, expenses, receipts, then there are some great tools out there, like QuickBooks, Wave, and FreshBooks, that are designed to keep your books organized. However, if your business is still small and manageable, then good old Excel can do the job just fine. Just make sure to keep your business and personal expenses separate. Also, if you're just getting started in business, I would suggest to start issuing invoices and sign contracts. It will make your bookkeeping cleaner and give a good paper trail. For example, if a client refuses to pay you, then you can use the contract to help take legal action. That's all for this video. If you have any questions, comments, or would like me to explain any other tax topic in detail, please feel free to drop a comment below. If you found this video helpful, please give it a like, hit that subscribe button, and share it with your friends who could really use a hand. Good luck with your taxes. Bye for now.